video that I released for this series, which is forecasting the pound against the US dollar. So this will be the second part to the series. The first part was released, I believe, probably about 10 days ago now. So what I'm going to do is just break down the second part to this series. And if you haven't seen the first part and you've discovered this channel and this is the first time that you're watching one of these videos, then there will be a link in the top right hand corner of this video that you can click on to look at the first part of what I was kind of forecasting and talking about when it comes to the price action for the pound USD. Also, if you like this content, then please feel free to subscribe, to drop me any comments. Once I've provided my insights and so on and so forth, and if you like just the way that I approach the market, and also the angles in which I'm looking at for forecasting these financial markets, then it'd be great to hear from you. Any comments, any thoughts, if you want me to break things down with much more clarity, or just kind of break down my thinking behind how I'm able to provide a forecast and then see the markets move in accordance with that forecast. And I always like to say that I'm not here, none of us are here as traders to predict the market with 100% certainty, but it's always good to have a working forecast in terms of direction of a specific instrument. And in this situation, we're looking at the pound US dollar. So without further ado, let's hop into this video. And to start everything off, what I'm going to do is I'm currently on a daily chart. This is a line chart, so I'm going to change this to a candlestick chart in just a second. But before I do that, and I'm also going to highlight my annotations. At the moment I've got them toggled off, but I'm going to highlight my annotations in just a second, and then we'll drop down into a smaller time frame. But I think the first thing I just want to highlight is the fact that this market, this instrument, has been moving higher since October. And one of the things I highlighted in the previous video, the first video to the series, was just in terms of how this market has moved from this point here, from here all the way up into this situation here, so the 1st of December. And basically what I was saying is that when the market made this move here, up here, my interpretation of that was that it was just a manipulation move. It wasn't a genuine move higher for this instrument. In other words, this market was not going to continue to trade higher. Just because of this move, it wasn't going to continue to trade higher. And what I was saying is that all of this that we had in December, all of this price action, was just to manipulate traders into the marketplace, to trick them into going long, pound USD. And I said that I wasn't looking for that. I wasn't looking for the market to trade higher. I was actually looking for the market to trade lower. And what we're going to do now is just break that down in terms of what's happened since the first initial forecast, what's happening now, and what I was looking for. So I think first thing first, let's just jump on a candlestick chart. And just in terms of what I shared, I'll just kind of give another quick snippet of what I meant. So I was basically just saying how what we see down here before this market moved higher is what we was looking at here as these candles were forming on the daily chart in order for this market to move lower. And basically what I said was as below, so above. Okay, so what we see below is what I was seeing above, the same type of price action. It's kind of an inverse scenario, basically. So I'm just going to highlight my annotations now, and that just drops me into how I look at the markets. I'm not going to highlight each of these horizontal lines and what they represent, because that's not super important, but I have gradually begun to break these concepts down in previous videos. So if you look on my channel, if you go back to one of my videos on the USD CAD, I kind of start to break down just a little fraction of what these horizontal lines represent on my chart. So we're currently in a daily chart. What I'm going to do is just go down to a 1 hour chart, because that's the chart that I use intraday, just to gauge price action and you know, to take trades and all that good stuff there. So I'm going to move across, and then what I'm going to do is just take out a tool that I used, when I'm presenting in these videos, that really just helps us to follow along, basically. So this is the tool that I use here. It's just a little cursor for me with an arrow. So at the moment, so just before we jump into the current day, this is a live trading session at the moment. The market's live, and you'll see these two buy and sell buttons here, sell and buy buttons here. So buy and sell, ticking around, because we're in a live market at the moment, and so I'm kind of doing this on the fly, if that makes sense. So here we are. So let's start with this. So we had this market move higher, as I said previously. So we had all of this trade, and then we kind of came here in December, at the beginning of December. We reached this point here, up here. So this 27 handle. So above this horizontal purple line that we've got here, we reached this point in the market just going into December, and we wasn't able to hold above this level here, this midpoint level. Okay, so price comes down, trades back up, and then again it's they're selling the market. So the institutional traders, the smart money, is executing and driving this market down, and then we see this play out into December. And I did take some trades on this particular run here on the Monday, and I held the trade for that particular week. That's in the past now. And then I was just kind of looking at how the market was reacting going into that new week, which was this Monday. So this week here, which was around the 11th of December. I was very aware of the price action and the way the market had traded down here. So moving from this point to this point here, I was very aware of what could potentially happen. And we had some big news that came out on this particular day. And what it did, it just drove the price action aggressively with a lot of velocity in one direction. And it drove it all the way back up to where it came from, which was here. And then we got above this key level here, and we got all the way up into this region here, this 27,700 or 2770. So that was a news event that was a catalyst to drive the price in one direction. And I think after that, we saw the market was unable to hold above this key level, and it starts to trade down. And then we start to see this sideways trading throughout December. So we had a lot of sideways trading. So the market's trading down, trades back up, isn't really trading, higher or lower, trades back down, trades back up, and then it makes a big break again. So here, large institutional traders getting into the market again at this high. They've taken out the liquidity up here, and then they're in the market again here to offset and to sell short on pound USD. So we get another type of situation that we've had here. Here, at this point, market trades back down. Institutional traders here stepping in, driving this price down to a nice opportunity here for them to kind of build a position. And again, from this point all the way through to this point, the market's just trading in this sideways consolidation. Okay, so there's a lot of consolidation taking place here. So I like to call this accumulation. So the market goes into this accumulation phase throughout December, going into January, and we had January. At the beginning of January, the market trades up, trades down. We have more news that comes out here that just again drives the price very aggressively up. And then the market again is just trading in this sideways pattern. And this time from this angle here, so from this high to this low, what we're seeing is we're seeing another sideways trading behavior. So price action behavior is trading to the side, and basically, it's going to get rid of this, and I'll take it here, get it here. So we've got it there to work with. Basically, what I was saying was in my first video, and I believe I've already reiterated this, that I was looking for a short opportunity on this market. So I was looking to take my sells anywhere up in this region. Okay, so anywhere in this region, I was just waiting for the stage to be set in order for me to be able to enter this market and start looking for short positions. And my target was here. Let's look at this. So my target was, this was my target. So I was looking to get into the market anywhere around here, preferably somewhere in this region here, okay, and hold for a profit target of 126, which is a key level that I've got marked up on my chart. So that's a nice little run there. Probably we're looking at over 100 pips there. Let's have a look. Yeah, so that's over 100 pips there, almost 200 pips. But that was my inhibition in terms of what I was striving for. And so what we had is, we had January. This is the first week in January. So we had Wednesday, we had Tuesday, which is the 2nd of January, Wednesday, Thursday, Friday. So that's the first week. And then we had that big push on the Friday, which offset this consolidation. And then we had the Monday, which was last week, Monday, Tuesday, Wednesday, Thursday. You know, very low volume, nothing aggressive about this move here across this weekly period. So from Monday to Friday, nothing aggressive, but just really confirming, the market confirming what it wants to do. So to me, I was looking at this and I was saying, okay, I've already forecasted what I'm anticipating in the first video, and I was just waiting to release the second part, really just to show, you know, by deduction, the first video and the second video, and how that forecast is now beginning to play out. And we can see, like I said, if you watch the first video, you'll be familiar with the things that I was sharing in that first video and what I was looking for. And basically the ideas remain exactly the same. And I was looking to take a position somewhere around these levels. So there's different days. So if we go into last week, there was opportunities here to, you know, just trade short-term, small breakouts on the Monday, the Wednesday. This day was quite a busy day, depending on what time zone you're trading. Like if we zoom in here, I have these boxes that have been highlighted across these candles, and it just represents the Asian session. And the London session here starts at 3 here. This is the London session. It starts at 3 a.m., which is 8 o'clock in my time. But in New York, it's 3 o'clock because I've got my clock is New York. But so this just represents the Asian session. These candles, 1, 2, 3, 4, 5. That's the end of the Asian session, and then we come into the London Open here in London. And there was an opportunity here, and then this just represents the New York session here. So we've got 9 all the way through till 3 o'clock in New York. For each day, basically, these boxes just represent each day. The time that the exchanges are open. So for me, anything after here is high probability. Anything in New York can also have a high probability in terms of taking an intraday scalping trade or an intraday trade. But primarily what I'm looking for is to build a position. You know, I'm not really interested in just these breakouts, just, you know, every single day. I'm looking to build a position over time and hold that position, you know, for key profit targets. And it just saves a lot of having to wake up every day, come into the market, look for a trade, and just play that intraday volatility. I prefer to wait for the market and enter the trades at a time where it's the highest probability and hold for a good range of pips. So anything above 100 pips, I'm looking to take my profits. Depending on the actual price action, if it's very aggressive either way, so to the upside or to the downside, then I will hold for even longer periods, you know, over 5 days, 10 days, just to reach that profit target if it looks possible and feasible within the market structure and within what I'm looking at in terms of the direction of the market. So this is really just a quick update video just to highlight where we are, what I was looking at from so basically I'm just going to drop down to a weekly chart and just come over here, take off my annotations. So when we had this week here, which was the beginning of January, we saw how price pulled back. The week that I was forecasting was actually this week, this particular week here. So this week commenced on the 8th of January. So when I was putting out my video on the Sunday or the weekend of this week, going into this week, my anticipation was that the market on this particular week would trade down into this candle, okay? And it didn't do that. What it did, it closed above the high. Sorry, the market made a new high and it closed above the previous close of this week. So we just had a small body here, a small range of trading in this range. It's a very small trading range. So this first week I was saying, okay, when this happened, I was saying I was expecting this particular week to trade down into this candle, but it didn't do that. And instead it's happened this week. So this imbalance, inefficiency is almost filled. We're only on Tuesday, so we've still got Wednesday, Thursday, Friday, so it's going to be interesting to see what happens. But from what I can see now, we're in a down week, and that could stretch even further, and we could see this low being taken, and even this low. This low is more probable to be taken because it's relative to this low, so at the moment, and this low as well, which is down here. So that's all liquidity resting here. And the market could potentially trade down to take out the stops that are resting below here, the liquidity that's resting below there. So I just wanted to say that because in my first video, I was expecting this particular week to trade down into this candle, and it didn't. It traded higher, fractionally, not too deep, but still sticking within the confines of what I was anticipating anyway in terms of the market trading lower on this pair. So if we go to a 4-hour chart, this is where we are at the moment, and just to put the annotations back on. So we're almost here. We're almost here actually at this level. One confession I do want to make is that I haven't yet entered any trades on this market. And the reason I haven't entered any trades is because I've been trading crude oil. I've been trading a commodity, and I didn't want to get caught up in too many trades at once because, you know, you have to take on risk and manage that risk. And it was just unwise for me to be in all different types of trades all at once. But I think what I am really excited about is the fact that this market is now starting to, you know, it's how can I describe it? I'd say that the coolest thing now for me is the fact that my forecast and my analysis is starting to play out in the marketplace. So it's like a self-fulfilling prophecy. Whatever I was looking at is now starting to yield to that you know, that approach that I was taking in the first place. So that's really cool to see. There's still opportunity to get into this trade. I am going to wait until this level has been tapped. So, you know, if we find some level of support here at this key level, there's a massive imbalance here in this market. So ideally, I want to see this pair get right back down to here. And that's something that could happen this week, or it might happen next week. But for now, I'm excited because I'm bearish pound USD, and it's starting to really break out of this sideways moving market. So we've had this type of situation here, and then the market's dropping from here. And this is a level that I'm interested in, and if the market gives me, because I wasn't able to get in up here because I was focused on trading another instrument, then I can look to enter my trades around here, and I will share those trades once I've entered. So I'm looking for some type of execution around this level, or if the market trades back up, then I'll be looking to execute within this ranges here as well. So I'm just gonna go down to the 1 hour chart. So I have two areas that I'm interested in for taking shorts if the market trades up, basically. So if the market trades back up into this execution range, then I'm going to take my shorts in here. Okay. If it doesn't do that and it just continues to drop, then I'll be looking for. So if it drops down like this, then what I can do is potentially take this up here. What I'd be looking to do is take trades in this execution range here. I'll be looking to take trades here. So I've got two areas. If this market starts to build up some support around here, going into Wednesday, Thursday, Friday, and it trades back up into this area, then I'll be looking to take some trades. So the market trades something like this. If it does this and trades up into here, then I'll be looking to take trades and go short back down to here, into this range here, into this execution range here, and I'll be looking to hold down to this level here. So from here to here, I'll be looking to hold. So I haven't quite missed a trade at all because it's only just really starting to unwind. So I've got some great there's options for me to get into the trade up here, and then if we don't come back up here, then and the market trades down and it starts to trade back up, then I've got opportunities to get back in here to take this market lower. And my interest is this key level here. So from up here to here, we're looking at like 200 pips, and I've got an opportunity here, and I've got an opportunity here to go short down to this key level. So I think that's everything that concludes this part 2 of the GBP USD. Definitely check out part 1 because it's going to give much more clarity and it's going to be much more fresh because it was my first initial forecast, and basically in a nutshell, that forecast, which was bearish from the beginning of January, is now starting to play out. Even though that week that I was talking about here, so this is the week that I was referring to. So I expected this last week, so this whole trading week here, so this trading week here to this day, Friday, I was expecting the market, so this pair, to trade down and to fill these areas of imbalance, but it never did. It just traded sideways. And then I knew that, look, it's going to come down at some point. I just got to be patient. And I've just kind of missed that entry yesterday because I was too busy focused on something else. And it's just dropped this morning. So, and I didn't enter the trades here. I didn't get in because I was too busy focused on trading crude oil. But I've still got my chances to take trades and to go short all the way down to where is it? It's 124. So if you have any questions, any thoughts in terms of my analysis, then like I said, please feel free to drop me some comments. From where I stand, I'm bearish. I'm looking to take shorts on pound USD. I'm not bullish, and I'm anticipating that we're going to get a drop down to here over the next coming weeks or so. So January, February, and then going into March. And I think part 3, I'll do that probably towards the beginning of February, just to see how price is behaving and how price is reacting to my forecast. And I think that will provide a nice update and a wrap for part 3 of this series. I might do a part 4, just depends really, but I'm trying to stick just to 3-part videos that reflect my forecast for this year. So if you got any value from this, please give me a thumbs up. Please feel free to subscribe, it helps the channel, and I look forward to sharing some more content, some more value in the next videos.